Hello everyone and welcome back. This is our second video tutorial, and today we are going to learn how to correctly use Savius Radarscreen. I want to start by saying that in Savius philosophy the tools will not make the trader as much as the shoes won't make the runner. At the same time, we want to say that the right tools though may help you enhance your performance. The Radarscreen in particular was conceived to be able to monitor contemporaneously several markets to spot the best trading opportunity at the glance of an eye, without having to continuously scroll from one symbol to the other. So let's get started. The first thing you need to learn is how to adjust the Windows dimensions, and this works exactly like in a Windows operating system. So you can just select the window and expand them or reduce it, or you can make it full screen, or reduce it again, or select it and move it around so that you can create the perfect setup for you. The Radarscreen and the charts are linked, so you can jump from one symbol to the other directly from the Radarscreen. You select the desired symbol, right click on it, go on Open Intraday Chart, and the desired symbol will be displayed. In case you want to change the list of symbols displayed here, you can go on chart settings, and then you can find a symbol list in this area. You can speed up the process by clicking simply on the CS button on your Sierra chart toolbar. As you can see here, from the same template you also will be able to change the time frame of the chart. By default, Sierra will open up the chart on the 60 minute, but you can decide to change it to 30 minutes by changing the number here, clicking on Apply, and then OK. Otherwise, you can use once more Sierra Charts toolbar and, for example, clicking on 1 hour to go back on the hourly chart. Now let's examine the Radarscreen alerts and indicators. The first series of indicators concern what we call bias, and that can be explained like a general market macro trend. You will find these indicators in column H, I and J. Columns H and I in particular are calculated on the 240 minutes chart and daily charts, which represent two superior time frames to the hourly chart, which is loaded by default. While the clear bias refers instead to the Ron-Black's clear method, and it's relative to the chart which is currently displayed. So as said before, with just the blink of an eye we can immediately spot which market is, for example, in a bearish mode and displaying some bearish signals, and which are instead on a bullish trend, and we might be looking for a bull entry for a long entry. Column K will just signal instead if the current bar is an inside bar. That means that the market is probably in a compression or in a congestion, like we can observe, for example, in this chart over here. On the chart, the first inside bar will be colored in orange and then in purple from the second onwards. The following alerts instead on the Radarscreen are based on price position. Column L will display price position as a percentage relative to the linear regression channel displayed on the chart, which is set by default to 144 period. So it can go well above 100%, right, we have at the moment displayed on the chart, as well as going negative. So this basically will help you understand at the blink of an eye if the price movement is overextended, or if it is against the main trend, or you can evaluate, for example, a reversal signal with a bit more of information. Column G is basically the opposite concept and signals a price reconvergence towards certain means. This could be used, for example, if looking for a good spot for a trend re-entry. Both the linear regression channel and the mean conversion indicators are editable by going on the Analysis, Studies, and then you can select the linear regression channel and click on Settings, and here you can change the input. To change instead the mean convergence indicator, you have to click on PMT, again going on settings, and click and change this value, which by default is set to 55, and then apply and OK. The last indicator uses instead the Bill-Williams awesome oscillator. It signals when the oscillator and the price are out of sync, which means they are moving in the opposite direction. So the radar screen will issue an alert, and the divergence will be displayed on the chart, as you can see here. For example, we have the awesome oscillator going up and the price still making new lows and going down. It happens here again, and this is actually signaling that the trend is about to change. Columns from B to E instead will just display alerts from our prop trading signals. So, to wrap it all up with just a quick glance from the radar screen, we can understand if a market is trendish and what the trend is, if the price move is hyperextended or in convergence, if price is in congestion or compression, if there is a divergence with the oscillator, if there is a trading signal developing which may represent an opportunity for us. So basically we can relax, as the radar screen will do most of the job for us by monitoring contemporaneously 12 symbols or 6 symbols or 3 symbols as we like. So guys, that was all for today. Thank you for your attention. I hope to have you with us also for the next tutorial, in which we are going to present our proprietary indicators.